What's up, guys? I welcome you in this wonderful video. So today I'm going to be speaking about market reversals, how to see when the market is about to reverse. So here we can see we have an uptrend, meaning that if the market is trending upwards, we're expecting two things: the continuation of that uptrend or a reversal. So usually when a reversal comes, I always say this: a reversal doesn't come usually by surprise. When the reversal comes, it will first show you that, okay, now I'm about to reverse, and then it will reverse. It is not usually by surprise. So I'm just going to explain the method that I usually use to find reversals, and I believe that if you use this method, it will be easy for you to detect those reversals. So firstly, and obviously, you should identify how the trend is flowing. In this case, we can see that if I can draw a trend line with a very beautiful trend line going upwards, and there is one very important thing that we have to pay attention into. It is the size of the waves and how they are formed in relation to their correctives. So with an impulsive, corrective, impulsive, corrective, and then a very huge impulsive. So one thing that this impulsive can tell you as a trader, it is that one, the buyers are getting stronger. That's so wonderful. It will tell you one thing, that the buyers are getting stronger. And then for this concept to be confirmed, or for us to believe this, we really need to see a corrective which is going to tell us if indeed the buyers are stronger or they are just playing around with us. And then we receive a corrective. However, we can see that this corrective is big as well, because as you can see here, we have an impulsive and then a corrective which is almost half the size, and then an impulsive again, a corrective which is half the size. Meaning, if you see this, it doesn't mean that the buyers were stronger. It means that they did try to be stronger, and the sellers also were able to counteract that strength by giving us a huge corrective. So this corrective, for the fact that this corrective is big, it cancels the amount of strength that the buyers displayed here. So you should make sure that you don't confuse the two, because people will see that they will see this wave and think that, okay, wow, the buyers, they are getting stronger, and they ignore how big the corrective is, and then they will start to like confidently start trading by the buying trend from afresh as if it was getting started, which is perfectly wrong. So once you observe your trend, or the flow of your trend, and the structures of your corrective waves and your impulsive wave, because these are the structures that are going to tell you if a market is about to reverse or it is still going to continue. What you have to do, which other traders don't usually do, is that never ever do the mistake of thinking that a breakout means a reversal. Let me just play the market here. We can see we have a very wonderful thing here with a breakout, and then a lot of traders will think that this breakout resemble a reversal. Usually reversals don't come only by breakouts. In everything that I explain, you shouldn't rely only on a breakout. A breakout is just one piece of a puzzle, but you also need another confirmation, which is usually the waves or even the highs and the lows of the market. For an example here, if you can combine what I've explained earlier, the size of this wave, and then compare it with this impulsive, do you see that now this impulsive, this corrective, is becoming the same size as the impulsive, which means that indeed the sellers didn't just counteract their strength, they are even challenging them now by giving them a corrective that is at the same size as their impulsive, which is something very interesting. However, for us to say this is a reversal, we need another confirmation. Firstly, we need a low which is going to be formed here, and then we need a high, and we want to make sure that this high is lower, or if I may say in simple word, it is not higher than that one. It can be at the same size, it can be lower, but we need it. So without us receiving a high that is lower than that one, we are not treating this as a reversal. And then one thing that a lot of traders will do, let me just clear something here so that you can see. Another common thing that traders will do is that they will say, hey man, look at what I have here, and then they will say this is a high, which is very wrong, because a high, if you say this is a high, you are trying to tell me that this is an impulsive wave, which is very, very funny, because this is not an impulsive wave, because it can't be compared to that. It can't be compared to that wave down there, ne? So you can't say this is a high. This is just part of the corrective wave, because it can be compared to what? To that one, ne? So that wave is almost the same size as this one. So it means that this wave and this high, they are part of this corrective wave which is going down. They are not part of the entire trend, because if you say this is a high, you are telling me that this small point here is part of the entire trend. And look at the siblings. Look at how high this point is and how low that point is. They can't be compared to that one. So I hope that is making sense. So don't make the mistake of seeing a breakout here and then thinking that it's a reversal. It's not a reversal. It's just telling you that the market is shifting from its initial strength or from its initial momentum to another flow. Those who watch a lot of my videos, they will know when I talk about a shift in momentum. So if a breakout happens, it doesn't resemble a reversal yet, but it resembles a shift in momentum. It can detect, or it can tell us that the trend is moving from a stronger trend into a more medium strength trend. I hope that is making sense. So let me just play it out again. So as you can see now, the market is going up, and then all of a sudden it starts to collapse and go down. These are the things that we're waiting for as traders. We're waiting for this low which is formed here, and then the market broke the corrective, meaning this is now an impulsive. And for us to continue with the buyers, we need to receive a high which is higher than that previous one, and we didn't receive it here. We received a high which is at the same size or even lower than that previous one, which is now another confirmation that, wow, this breakout here can now resemble, or it might mean that the sellers, they are now beginning a downward move. Why? Because I didn't look only at the breakout, but I then added the next confirmation, which is this highest point, which is not higher than the previous one. And then from this highest point, I can now say, okay, now I can start looking at the market with an eye of a seller, but then I need to receive a low which is lower than this one. So you say that the steps that you take when you're analyzing your trade, you don't just jump in from one signal or from one confirmation. These things have to add up, and you have to make sure that when you enter, now you know what you are doing. And let me just play the entire thing so that you can see. There we go. The market is now moving down. Let me just close it. So as you can see, this is the entire downtrend. So it began just by observing the flow of the trend, observing the lows and the highs, observing the waves. And then from these waves and from these highs, then you can know that, okay, now the breakout is coming, or now the downtrend, I mean, has begun, because you've observed all your things. And then when all those structures are being broken firmly, for an example here, we can see that our lowest point was broken here. Then that's when you can say, okay, now I'm ready to begin selling. And if you are if you are not ready, or if you are not sure, then you can wait for a good seller's confirmation, which was this wave here, which was in a form of a corrective, and then you can analyze it and then enter on its breakout or on its retest, depending on how you analyze a corrective wave. So this is how, guys, you should analyze market reversals. Make sure that you look at the flow of the trend, look at the highs, look at the waves, everything that you can possibly find, and then try to make conclusions from that. Don't just enter from one signal or from one confirmation. It doesn't work like that. So let me just leave it here. Thank you for watching.